Alright, just take note that this presentation is purely for educational purposes. The information in this presentation is intended for general circulation. It does not take into account specific investment objectives, financial situation, or particular needs of any particular person. Alright, so moving along. Pretty quiet markets for the past 2 weeks. I mean, if you trade FX, for example, if you look at a lot of the pairs, and if you look at the 4-hour chart, daily chart, you notice that a candle does not really signify much pips these days. It's just really quiet markets. And if you look at indicators such as the ATR, the average true range, notice that the volatility is really, really low as well. All right, so just be a bit patient. Sometimes the markets need a catalyst to spark it off before there are very significant trends. All right, so a lot of sideways markets, which I will cover in a while's time. But what I noticed is that a lot of sideways trading. All right, so simply drawing your key support and resistance lines and just trading off the levels. Okay, that's how I see the markets right now. So for those who are new to the webinar, I use a lot of price action. Price action to me is one of the most important things when it comes to technical analysis. Basically I'm using price action to see what phase the market is in, whether it's an uptrend, downtrend, or consolidation. And once I'm aware of what the market is trying to do, I will look for a reference chart, reference time frame. So it can be a daily chart, 4-hour chart. In my trading, I normally use either daily or 4 hours as a reference point. If the daily and the 4-hour chart is telling the same thing, good to go. All right, those are nice trading markets. However, if the daily and the 4-hour chart is telling two different things, there might be still a trade on. Okay, but it might not be as trending. All right, so I'll probably keep it in the shorter term. So if you look at entries and how to enter the market, right? I mean, I always cover a bit of theory just for the benefit of those who are totally new to the webinar. So if you look at how to enter the markets, how to buy and sell, basically after you determine whether the market is in sideways, uptrend, or downtrend, this is a little cheat sheet that I use on how to enter the markets based on pullbacks. Okay, it's not always based on pullbacks. Sometimes it can be based on breakouts as well. It depends on the strategy I'm using. Okay, but all in all, I'm using price action and just basic support and resistance to understand where it's coming from. Now, before I start the markets, right, I'd just like to check. I mean, any one of you here are good analysts but bad traders? I repeat the question. Any one of you here are good analysts but bad traders, meaning that you are very good at reading charts. You know, sometimes you can tell your friends, you know, where the euro dollar might go the next week or something. And more often than not, maybe 60 to 80% of the time, you're spot on. Okay, you're spot on. But as a trader, you still lose money. Any of you experience that? Yep, I see some hands. Well, if you are a good analyst but a bad trader, right, one thing you need to ask yourself is why is that? Okay, I used to be like that. Okay, 1-2 years ago, I used to be like that. Okay, I'm really good at predicting based on the charts where the markets will go, but when it comes to being a trader, all right, I'm still a losing trader, and because trading requires a totally different skill, and you know, sometimes you attend those educational paid courses out there whereby they teach you a method or a strategy or on how to look at the markets and how to enter and how to exit, you know. It's not enough because that is a really small part of trading. Okay, because the big part of trading and why some of us are good analysts but not good traders is purely down to the psychology, the mind. Okay, because trading is not as easy as learning a system, even if you learn it by heart, right? There are still times where if your mind is not stable or not consistent, you will still do funny things in the market. Right? In fact, if somebody who's not consistent in trading because of their inconsistent psychology, you know, I can give them a trading signal that probably have 90% profitable record, and yet there's still a possibility that he or she could lose money. Do you believe me? Yeah, because when it comes, even the trading signals is 90% accurate, all right, more often than not, if the trader's mind is not consistent or is not settled, All right, there's a lot of time when the trader will intervene and do funny things. Either he'll take profit too early, or move the stop loss, or over leverage. And because when you do all those little things, all right, to you it might be little, but these are the things that can alter the whole ratio of profitability when it comes to the trading signal. All right, so it's very, very important to build a consistent mind when you're trading, especially if you are a good analyst but a bad trader. Yes, Lenny, I agree with you. Stock investing is totally different from trading. Totally different. And it's all the more so for the markets these days. Because if you ask me fundamentally, does the market make sense? No. Has it been making sense for the past 5 years? No. But it is what it is, right? Would I rather choose to fight the markets, or do I just want to go along with it? I'd rather go along with it. Okay, because of the past 5-6 years, we all know that the market is being supported by cheap money with all the quantitative easing going on, and yet it's still like that. All right, just when you think that the correction is coming, it just makes new highs. Okay, so you just got to be very flexible. All right, and if you have a strategy that you think is profitable and suits you, practice it, and then work on psychology. All right. So let me move on to the charts right now. Again, any of you have any questions, feel free to just jump in, say something, just type into the question box. Okay, let's move on to charts now. If you look at most of the indices, right, we are in a very interesting time where most of the indices are just doing nothing much. I would say consolidating. Okay, so if we look at, let's start at S&P. So S&P, you can see that the previous high was here, which is around the 24, let's say 2450 level, 2450 level. Trend is still to the upside. Okay, although if you look at the MACD, okay, you can see that it is made a higher high here, but the MACD is made a lower high. So this is what I call a bearish divergence. All right, bearish divergence based on the MACD. So if I draw a horizontal line, right, you can tell that the resistance is anywhere around 2445 to 2450. In early June, all right, the bulls tried to make a run, try to break above it, but they couldn't. Okay, so if we look at the price action on the 4-hour chart, you can see that the bulls try to push up, but it got sold back down immediately. Okay, so you can see that, yeah, on the daily chart, I'm sorry about that. Yep, so you can see that on the daily chart, sorry, my charts are not loading properly. So just give me 1 minute, let me just sort something out. Technical issue. You guys can see my chart. Some of you have no audio, is it? So for those of you, again, who can't hear or can't see, please say something. Okay, so thanks Francis. Okay, perfect. So back to the S&P. So if you look at the 4-hour chart, right, it's really, really sideways. And if you notice that you can sort of draw a triangle consolidation, all right, ascending triangle. You can see a series of high lows. So the momentum is still towards the upside because there's a series of high lows. But you can see that the resistance is quite clearly defined. All right, anywhere around 2445 to 2450. All right, we made a false breakout. And you can see that every time the market hit, whenever the bulls try to push it close to about 2450, a lot of sellers are there waiting to push it back down. All right, so there are only two things that might happen here. Let's draw a line. Okay, so the first thing is that we make a new high and break above this 2450 level. Okay, because if we break convincing above, we can push higher. Okay, or we might consolidate back here, or we might start to break down to this level of support here. Okay, so 3 scenarios. Right now for me, we are in the middle of nowhere. Okay, I wouldn't do much in this triangle. Okay, right now in the middle of nowhere. So the short-term support is around here. So let's see what happens here first before we look for trades. All right, let me just draw a nicer line for you. Okay, the immediate term support is somewhere here. 2432. Okay, if 2432 breaks, highly likely really we are going back to the 2426 level. Okay, so there's a lot of sideways trading, but that's how most of the markets are, especially the indices. Okay, so if you look at the daily chart, you can see that there is bearish divergence in MACD. You can see they're still pushing higher low, but this is the level I was looking at. Remember the 2432 level somewhere here. Okay, so if this level breaks, high chance we're moving back to the 2420 level also, somewhere here. Okay, so this is a bit more of a consolidation type of play. If you go to a lower time frame, right, you can see that it gets messier and messier and messier. All right, not much there. But I just want you to take your attention to this price action here. See this one here? This is a 1 hour chart, yeah? Okay, I just want you to take your attention to the price action here. Let me just delete this circle here. Okay, now you can see that the market tried to break above this level again, the 2445 level, and then immediately got sold off. Okay, this was on 27 June. 27 June. If you look at the 4 hour chart, okay, you can tell that this level here, let's say it's 2445, is resistance, resistance, and it's possible resistance again. Correct? So on the 4 hour chart, you can tell that this is a good resistance. Of course, right now on hindsight, we know that it got sold off, right? We know that the bears came in and sell it back down when they tried to break above 2445. But even before the bears reacted, we can tell that 2445 is resistance. Okay? Now, at resistance, okay, there's only two things that can happen. Either the resistance is broken and it will go make new highs, or the resistance will be respected and you'll come back down. So for this case, even though the resistance was broken, okay, the next candle that you see is what I call this is a very, very convincing bearish engulfing candle. Okay, and let me just delete one of the circles here, sorry. See, this is big red candle. So this is a very, very big convincing bearish engulfing candle that totally overlaps the past, how many? 1, 2, 3, about 5 green candles. So it shows that there's a lot of sellers here. All right. And what I want you to pay attention to, you notice that after this big bearish candles, all right, the market pushed back up, back to exactly close to the 2445 level before being sold back down. Okay, and if you attended my webinars a couple of weeks ago, all right, in fact, I spoke about this a couple of times. This is a classic false breakout. Okay, false break setup. Okay, false breakout setup. Sorry, my handwriting is really bad. It's not easy to write with a mouse, but basically this is a classic false breakout setup. So basically you see a resistance, the market goes up, okay, only for it to come back down, and when it pulls back to the previous resistance, all right, this is the entry level, and then hopefully it comes back down again. Okay, so this line is key. See, this line was resistance, okay, was broken, should become support, but then the bears pushed back below it, and then became resistance again. And this, if you're trading a false breakout, this should be an entry level. All right, so this is the level here. Okay, so the main times, and if you look at the higher term time, so for example, if this is a 1 hour chart, if you look at the 4 hour chart, okay, you will normally see a bearish pin candle, something like that. Okay, because this shadow here of the candle normally represents the total reversal of the breakout. You get me? Sunil, yes, Sunil saying, isn't this a head and shoulders? Yeah, it is a head and shoulders as well. Yep, same analysis, whether it's head and shoulders or false breakout. So Sunil was saying that, let me just get back Sunil was saying that this is a head and shoulders. You're right, you're absolutely right. Shoulder, head, shoulder, correct? Depends on where you want to draw the neckline. The neckline can be here around 2432, 243 or 2432, or it can be slightly higher. Okay, but yeah, you're absolutely right. This can be head and shoulders. Right, in fact, if you've seen this as a head and shoulders, all the more this is another reason why this is a false breakout setup. All right, so if you look at the 4 hour chart, okay, you can clearly see that this was a bearish pin candle. In fact, there was another false breakout setup, but this one was a bit trickier. So if you notice, Yeah, this one's a bit tricky. I think it was hard to take this one over here. I was hoping, looking whether there's any setup. It's a bit tricky, this one. Okay, because at this point in time, if I were here and I see a nice big green candle breaking out, okay, and pulling back, okay, there's no reason why you should not take a buy entry here. Because to me, this is a good setup in terms of a breakout to the upside. Of course, on hindsight, we know that it drifted back down, but at this point in time, it actually looked like a good breakout to the upside, right? Because if you look at the daily chart, this is a nice big solid green candle close above the resistance of 2445. Okay, of course, on hindsight, we know that it came back, but to me, this is a valid, it looks like a valid breakout. But the one that I'm talking about, which is a very decent looking, good looking false breakout entry, is the one happening here, 26th of June. This bearish pin candle for our chart. Okay. Sunil, did I answer your question? Yeah, right. This is a head and shoulders. Okay, so that's the S&P for you. So very, very sideways. So just know your, make sure you know your levels and trade carefully in terms of because there's not much direction. Okay, if you look at the other markets, right? Let me just have a quick glance over at the Wall Street. Exactly the same thing. Okay, so if you look at the Dow Jones or the Wall Street, it's consolidating some kind of triangle consolidation pattern. Okay, so most of the indices like that. Now let me move on to DAX. Okay, so looking at the DAX daily chart, doesn't it look exactly like the S&P? Right, so it's consolidating in the ascending triangle. You can see that it's still slightly bullish because of the high-lows form, but the good thing is we are reaching the apex, so something's got to give. Either we're going to break to the upside. Okay, to me, the break to the upside, it needs to clear above, at least above the 12900 level convincingly. It needs to clear above it with candle close, and then most probably the bulls are in charge. It might push high to 13,000. Okay, but if you look at the 4-hour chart, okay, you can see that it's a bit more sideways. All right, really sideways. So for now, there's really nothing much. Yeah, it's close to support. Okay, but I prefer it slightly closer around the 12660. So take note of this support level around the 12660 level. Okay, if it breaks, then high chance we are going back to the 12520, 530 level of support. All right, but if you look closely again, there's another where is it? If you look at this candle here, okay, if you look at this candle here, this was 14th of June, where I can see a bearish pink candle at the resistance. Okay, so if you look at the 4-hour chart, this one here, let me just redraw the circle. Okay, let me just zoom in for you. Okay, this was a bearish pink candle on the daily chart. Okay, so is this considered false breakout setup? Not that clean. Okay, if I would most probably miss an entry if I were to try to take this. Why? Because if you see the candle, firstly, it's not the most convincing because this bearish candle did not engulf the previous bullish candle. Okay, and secondly, in terms of the entry, it did not come back exactly back to around the resistance level. Because if I zoom out, right? Oops, sorry about that. Okay, because if I zoom out, you notice that there was a touch here, this resistance, another touch here. Okay, this one didn't really make it up to the touch of around 18. What's the level? 12,870. So this one was a bit short. This one touched, so was good resistance. Touched about 3 times. This is little candle here as well. So ideally, I would like for it to come back to the 12,870 level. Stop loss above the previous high, and then try to trade the false breakout setup, counter trend to the downside. But for this case, most probably would have missed an entry because the candle just made it close to the 12,850. Didn't go back to the, I call it the scene of the crime. Okay, scene of the crime meaning that the resistance, the support back, and then turn back the resistance. So didn't really make it back to this line before it fell again. Okay, but the reason why I'm highlighting all these examples to you is because false breakout setups are there. Okay, is especially in consolidation range bound markets like today. Take note at key support and resistance levels. Alright, take note of false breakout setups. It's always there. Okay, more often than not. Look for bearish or bullish pink candles on the high term time frame, and when you go down lower term time frame, you can plan the trade. Look for bullish or bearish engulfing candles and look for pullback back to the scene of the crime. Alright, so such setups are always good risk to reward because your stop loss normally is either the previous high, the previous lows, and your target can be all the way back to the other end of the consolidation. All right. Any questions so far? Sunil, you said there's divergence on the indicator. You mean the 4-hour chart or the 1-hour chart? Yeah, I mean that there might be divergence, yeah. But I mean divergence can always enhance, I'm not saying enhance, can always add more weight to your trade plan. But this is just a basic false breakout setup that I'm mentioning. Okay, especially in such market conditions, very useful strategy. All right, so that's the DAX for you. Let me move on to the Nikkei. Okay, so if you look at the Nikkei Japan 225, you can see that the market is in uptrend consolidation. All right, you can see that, yeah, this one's a clear divergence. You can see that lower high, but the same high here. But if you look at this, basically it's consolidating. All right, it's consolidating. It's a bit of a wedge formation. All right, so it's still bullish, but in this wedge formation. Now let's see whether there's any good levels here to look out for. Okay, the 4-hour chart the 4-hour chart gives us a bit more levels to look at. So if you look at this, okay, you can see that it's a series of higher highs. All right, so the trend is definitely to the upside. Definitely to the upside. One interesting level though is this one here, 20,2400. Okay, 20,240. You can see that it was resistance here and it's potential resistance here as well. Okay, which means that the two key levels I'm looking out for the Japan 225 and Nikkei is number one, the support at around 20,100, because if this breaks, high chance we are going back to the 20,000 level, which is the channel or wedge trendline support as well, near 20,000. However, if this key resistance at around 20,230 breaks, we might go back to the previous high or even break the previous high of around 20,350 or so. Okay, but basically I think the reference chart seems to be the 4-hour chart because the support and resistance is more defined. As compared to the daily chart, we look at the daily chart. Okay, you can see that, yeah, it's an uptrend. It's just that the lines are not as, the support and resistance lines are not as precise and clear as compared to 4-hour chart. Okay, so use a 4-hour chart as a reference point for the Nikkei or Japan 225. Sunil, okay, Sunil has a question. Would you treat this as a tree drive pattern and look for a quick short, is it? You mean short at the resistance at around 20 to 30 or so? Is that what you're saying? Or are you looking to short at the break of this support? Because if you're short of the resistance, is it? Possible if you're trading a 1-hour chart. So for example, Sunil question was asking whether you can do a quick short trade at these consolidation levels. Again, it boils down to what's your reference chart and what you're trading off. So if you're looking at the 4-hour chart and you've clearly identified that this 2230 level is good resistance based on these previous touches here, there is absolutely nothing wrong if you try to look for shorts around here. Okay, the question is, where's your risk to reward and where's your stop loss? All right, so this level, yeah, it's quite decent. Of course, the high side is easy. But if you taken a short and put a high stop loss, you might get stopped out in this case. Not the cleanest of trade. Not the cleanest of trade. I prefer to trade when the 4-hour chart when the 4-hour chart and daily chart are clearer. Right, but if you want to take a shorter term trade based on the 4-hour support and resistance levels, yep, for sure. Definitely, why not? Because the risk to reward, if you see that, let's say if you take a short here with a high stop, your risk to reward is definitely very positive. All right, you're looking at least 1:3 or 1:4 even if you're targeting back to the previous support levels. Yep, possible. Okay, so in such market conditions, when the markets are very range bound and you're just trading consolidation sideways patterns, you can trade off key support and resistance levels with higher stops, and you can use false breakouts to plan your entries as well. Possible. Yep. I hope I answered your question, Sunil. Okay, so that's the Japan 225. Let me move on to China 850. Okay, while most of the indices market has been really rather sideways and quiet, the China markets has actually been pushing higher and higher. All right, look at this. Really bullish on the China 850. If you go to the weekly chart, you can see that, let me just draw a line across. Yeah. Not much resistance in the way of the current push actually. Slight resistance here. I think the next stronger one will be around the 11,800. So this is a weekly chart. Nice bullish trend to upside. Okay, if you look at the daily chart, okay, the daily chart has a divergence because if you look at the price action, right, very clear higher high swing, but the divergence is showing a potentially lower high, which means that we might look for a retracement, maybe back to support level at around 11,280 or so before we make a push higher. Possible. Okay, but there's that bearish divergence on the daily chart. So if you look at the 4-hour chart, still looking bullish, still looking bullish. Nothing much to do here because we are near the highs. Would you fancy a short? Not a good probability setup because most of the daily and the 4-hour chart, the momentum is more towards the upside. Okay, more towards the upside. Looking at the 1-hour chart, okay, you can see that the resistance is somewhere here. Let me just delete some of the lines. As you go to the lower time frame, you can see that the resistance is clearer. So the resistance, the previous high was around the 11,470 or so. Right? But there's every chance that it might push higher, even though there's a daily bearish divergence. Why? Because the momentum is pretty much bullish, very bullish. Okay, so for those of you who likes to trade, or who fancy trading range bound condition of support and resistance levels, right? Even though, for example, you see that this is quite a decent resistance level of the 1-hour chart, I wouldn't recommend to trade off resistance levels in such markets because the momentum is very bullish. All right, there are better markets out there for you to trade your consolidation patterns. Okay, because at least for this case, right, the daily chart, the 4-hour chart, the 1-hour chart is all very bullish in terms of the momentum. And you look at the moving average, right, very steeply pointing upwards. Okay, so in terms of momentum, if you are planning to trade off a resistance level and short or sell, then I would say the probability might not be as good because of the you're trading against the momentum. As compared to something like this, let me just pull out something here. Okay, basically this is a pound Aussie trade. I took a screenshot. It's a bit small. I hope you guys can see. I'm sorry about that. But I took a screenshot last week so that I can show it to you during the webinar today. But if you see and notice the difference, so this key level here, see this line I drew? Okay, that's a resistance whereby there's a high probable short entry. But you see the difference between this pound Aussie trade and the China 850? Okay, is that look at the 4-hour chart. It's actually consolidating sideways. Okay, the daily chart is still bearish, and the 1-hour chart. The 1-hour chart looks slightly bullish, but you can see that it's hitting a key resistance, a 4-hour resistance level. So if you want to short off support and resistance levels based on consolidation markets, this would be a much safer setup in terms of probability, much higher probability setup, because the bearish momentum is on daily chart, so it's supporting your case for short. The 4-hour chart is sideways, and it's at key resistance. You can see that this is a very strong resistance based on the line that I draw. All right, so this is a much higher probability setup than a setup something like this. Okay, so even though the resistance is quite decent on the 1-hour chart, momentum is very much to the upside. All right, Peter is asking, good question, Peter. How to tell momentum? Well, you can tell momentum based on number one, price action. So if you look at the daily chart, right? So price action gives you direction. So you can see that the China 850 was consolidating in some form of channel here. And then when it clearly broke above the 10,600 resistance level, it's a nice uptrend. Okay, and you can see that it consolidated a bit here as well. Okay, so let me just draw a box for you. So it consolidated here, uptrend, and then it consolidated here again, a bit of a false break, but now it's pushing, it broke the previous high. So price action number one gives you direction. Okay, it gives direction. Now, how do you tell momentum? Is basically the key. Number one, you look, the easiest way to look is the moving averages. All right, so moving averages are lagging indicators. Okay, I don't trade off moving averages by itself, but why I like to lay out three moving averages there. Mine is 10, 20, 50. The reason why I like to lay out the moving average there because it gives me a visual cue on what the momentum is. All right, so if you see the moving averages pointing steeply to the upside or downside, and if you see that the price is quite a distance from the lowest moving average, you can tell that momentum is strong. Okay, will it retrace back to the moving average before pushing higher? Possible. Okay, but because the moving average is pointing steeply to the upside, and because the price is a distance away from the lowest moving average, in this case the 10 EMA, this can be indication that the momentum is strong. Okay, and one final point is that if you look at all different time frames, daily, 4 hour, 1 hour, you just look at the moving average. Everything is pointing steeply to the upside. And plus the moving averages are all in the same order, meaning that the lowest one followed by the medium term and the higher term. So you can see mine is 10, 20, 50, 10, 20, 50, 10, 20, 50. All right. So Peter, if you want to gauge momentum, for me, moving average is quite a good way. It just gives you a visual cue of what's happening. You can put one, you can put two or three moving average, doesn't matter. As long as it gives you a clear cue, a clear guideline, I would say. In fact, moving average can act as dynamic support and resistance as well. Okay. All right, so that's China 850. Any other questions on indices before I move on to FX? Wow, as usual, I'm talking too much. I've not even touched FX, 742. Okay, never mind. So, yeah, correct, Peter, that's correct. You can use moving average to gauge. Okay, but you must be good at your price action first, okay, because price action gives you direction. In terms of momentum, you can use moving averages. Of course, there are many indicators out there. You can use the average true range. You can use RSI. You can use anything. I mean, it depends on what you're comfortable with. I personally just use my price action and moving average. Okay, so let me move on to FX. I'll take a 10-second pause before I start.